Hello, happy weekend, everybody. This is Rob Reinhold, joined by Ankit Sharma, and here we are in the third week of August. This is the Currency Room. Let's jump into it. In this session, we're going to talk about what happened last week. We're going to go over all the broad markets. Then we're going to jump into each currency, scoring it from a +3 to a -3. And then you know what we do. We pair up the strongest versus the weakest, and that's where we hunt for the week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Let's start off with equities. Let's just go back in history. 2 weeks ago, we had the markets fall apart. Over the weekend, we had a huge spike in the VIX. It all spiked all the way up to 60. And then look at where we are now in the VIX. We're just back down to where we were 3 weeks ago. So we just had this massive volatility spike, but pretty much everything is back to normal. And this week was the largest gain in equities since last October, so almost a year ago. We also got a surprise rate cut from the RBNZ. The market was not expecting this. So the Kiwi fell pretty hard on this news. But when I did my end of day video on Wednesday, I talked about how yes, it fell, but there wasn't that second wave of selling. And it was most likely because people are looking at this as a one and done. And if we check in on cryptos, you know what? The cryptos, it didn't really do much, but Litecoin, for some reason, I could find no news on it. Litecoin outperformed and it shined quite nicely this last week. Let's take a look at some of the major news of announcements. Aussie wage price index, lower than expected. US PPI, much lower than expected. And then the CPI on Wednesday came out as expected. Now the PPI was weak, and I was worried about, I've been talking about this the last couple of weeks, that if these economic numbers start to get too weak, if inflation starts to get too weak, that's a warning sign that the economy is in trouble. So this PPI was taken as good news, but if we got those same numbers in the CPI, I actually think the market would have reacted pretty badly. These numbers are perfect. Absolutely perfect numbers, and it gave everybody the confidence to say, oh, the economy is still doing pretty good. Australian employment report was phenomenal. The Aussie had a great last part of the week. And then if we take a look at US retail sales, these were just incredible. Absolutely killer numbers. So anyone who was worried about the economy, and that's where we were 2 weeks ago with the spike in volatility, that, oh my gosh, we had just had a weak payrolls number, just had a weak jobless claims number. Everything's fine. Everything is totally fine. And so it looks like we are back to rally mode. The market is no longer worried about economic growth, so we're back in rally mode. And we saw all that in the numbers this week. I mean, take a look at these returns here for equities. S&P up 4%. The Q is up 5.5%. These are monster numbers for a week. Crypto was okay, but we'll take a look at them individually, see that that's really just Litecoin up 10% for the week. Gold had a breakout to a new all-time high. We're getting money going into gold as a risk-on asset. Typically, this is a risk-off asset. It looks like people are just buying all assets, and oil is traded up from the bottom a little bit more. If we take a look at the S&P, I actually said on Wednesday that we're going to have some overhead resistance in this area. I said, look, in this area, it's going to be tough to get through. I said, I think we hang out in this area for a couple of days before breaking higher. Well, the markets don't have to listen to me. They rarely do. And you can see that we got a gap up on Thursday. This is a very powerful candle. I mean, this candle was the same here. A gap up, but people didn't take profits. They bought more. Anytime you see a gap up and a run, it's very bullish. Anytime you see a gap down and sell off, that's very bearish price action. So for me, I'm looking at this. We haven't quite cleared out of this band of resistance here. But look, It's just a matter of time. We could back off a little bit next week. That would not surprise me at all. But for me, equities are most likely moving higher. Ankit, what's your call on equities?
Hey Rob, yeah, I totally agree. I mean, this is a pretty bullish V-shaped recovery, and I expected a little bit more of that struggle of the or that W-shaped recovery. This is a very strong recovery. So, all the fears of the recession and all that, they're kind of behind us. Like everybody is now going to gone back into that risk on mode, and we can see that across the board. We can see that in the equities, we can see that in the currencies. So at this point, I think markets are likely to retest that prior highs that we had set up early in July. So I think what we are looking for is a bit more positive momentum for the next couple of weeks till we hit that resistance, and then we'll find out which way it goes. But I think right now there's definitely that momentum is there. You want to be on the right side of the momentum, which is on the upside.
Thanks, Ankit. And if we take a look at the currencies, Aussie and the pound were the best performers. Now, these have been the best performers on relative strength over the last really month or two. But I do want to point out the Kiwi. Remember, we had news out here that should have killed the Kiwi. The Kiwi did drop about 1% off of that report when they cut interest rates, but then it came back. I'm not saying that the Kiwi is going to be the greatest thing. I still like Aussie and pound much better, but to me, that's a sign that risk on assets want to be bought. Then we've got our three defensive currencies. They went down just like they should have. CAD, we've talked about, is highly correlated right now with the US dollar. So whenever we notice this, we really shouldn't be even looking at CAD, because CAD is just going to do what the dollar does and probably about half as much as what it does. So for me, CAD is pretty uninteresting. The euro, surprisingly, had a little bit of strength at the last part of last week. I'm not quite ready to buy into euro on the long side here, but we have to take a look at it on a chart and see that it's looking much, much better. And we'll take a look at all these charts here in just a bit. Crypto was basically flat, except for Litecoin, who was up 10%. As I said earlier, don't know how, don't know why. Sometimes you don't ever figure out why. I remember as a young trader, I would yell at my screen, why is this happening? My screen never answered me, so I stopped asking the question. Sometimes you just never know. All right, so let's finish up our market analysis. We took a look at equities. Here's bonds. And bonds are just hanging out down here below 4. I think the market is really happy here with bonds in this area, 3.7 to 4% on the 10-year U.S. government bond. Above 4%, I think that's when you have to assume that the dollar is going to start to strengthen again. But as long as we stay down here, I actually like dollar short. And we'll take a look at the chart here on dollar in just a bit. Cryptos as the basket, we had the big drop. We bounced off the bottom, but remember, equities. Equities had this fall, and then equities had a V-shaped rebound. Crypto is not having that. So that is just a signal that's saying avoid cryptos long for the time being. Let's take a look at the calendar next week. Get ready for potential price action. On Tuesday, we've got Canadian CPI. We'll watch this and see if this is going to uncorrelate it from the dollar. Right now, CAD and dollar really the same trade. Here's a question. Will this make the CAD go higher or lower against the dollar? We're going to be watching for that. Other than that, boy, I just don't see a ton here. We got some manufacturing out of Europe, Canadian retail sales. So we do have two big reports on Canada. And then we do have the Jackson Hole Symposium. I want to spend just a second to talk about this because this is something that has changed within the past 5 years. Past 10 years. I guess it's been a little bit longer than that. They've been doing this symposium for 30, 40 years in Jackson Hole. And all the central bankers from around the world all meet there, and they all give speeches, and they all have their fancy dinners. No one cared. Nobody cared until about 10 years ago, Ben Bernanke used his speech at Jackson Hole to set new monetary policy. And it freaked the market out because they weren't expecting this to be a monetary policy meeting. And then he did it again the year after. And over the years, they've been using this symposium to announce changes in monetary policy. Most likely this year it's going to come and go without any sort of news, but we do have to understand that there might be a change in policy. However, the market isn't in flux right now. Everything's really smooth. Everyone already knows there's one rate cut coming in September. Like, everything is pretty mellow right now, so I don't think there's going to be any major change in monetary policy in this meeting. I think you can pretty much ignore it. But it's something we do have to be aware of when it comes to this time of the year, every single year. So this week, I don't see a lot out there. CAD's got some information coming out. But other than that, I think this is just going to be a regular trading week. So let's go in and break down all of the currencies from +3 to -3 to really find out what we're hunting this week. In the crypto market, I've been pointing out Bitcoin has been, quote, outperforming the rest, but I've been very clear that it doesn't mean it's a buy. So you can see Bitcoin here off this bottom, it hung out, but it cannot break above moving averages. The fact that it cannot break out above moving averages tells me I don't want anything to do with it. It's been in a -1 now for 2 weeks, and frankly, it's still at a -1. There's nothing going on here that says that this is a good buy here or about to change. So while Bitcoin has been outperforming, it doesn't mean it's the greatest thing. Bitcoin Cash is even lower. As you can see, it's not even come up to the moving averages yet. It's outperforming, doing about the same thing. Ethereum has been awful. Ethereum has been the worst of all of them. A bigger drop than the rest, and we can't even bounce back up to this 50-day moving average. At least Bitcoin is close to the 50. This thing is just getting killed. And then Litecoin, look, I have no explanation for this. It did everything the rest of the cryptos did. Came down, bounced up, reached this base here, but for some reason, it's been able to break its way out of that base. It's still only a 0, so I am completely uninterested in crypto this week. Ankit, let's jump into the Forex market and find some pairs to trade. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader?
Absolutely. Let's just take a look at the charts. And I must say, there's a lot of shuffling around in the charts because, here we are, starting with the USD. You can see that this thing has not changed. The trend was a -2 last week, and it's continuing to be a -2. I'm going to point out one thing here is that if you take a look at the price action, we did try to get back in the range. And look at that, we failed. So again, this is the first time that actually the dollar is looking bearish to me. For the most part, dollar has been trading in the sideways range and it's going back and forth. Now when the rallies are getting sold, that's a bit of a negative sign here. Especially as we talk about that correlation with the bond yields. The bond yields didn't move much, but the fact that the dollar is weak, I think there's definitely more downside that's likely here. So nothing has changed for the dollar. As we ended this week, it was bearish, and going to next week, it just looks bearish again. Now, on the other hand, the yen. I know we talked about how this massive recovery take place, and where did the yen go from here? Is the carry trade back on? And you should really take a look at it. This thing is still relatively, holding around the moving average there. So I would say, the trend is still sort of intact. There's definitely more weakness. We saw that dollar bounce and really fall back below that the rally. Again, that's just telling me that maybe the dollar is more in contention of that downside risk here. So perhaps we'll just take a look at maybe a little bit more further downside in yen, but I think there's better shorts out there. I don't think the yen is really the best short here because the yen is now catching a bounce, as we saw today. So a bit of a mixed outlook here for the yen. I don't have a clear idea, but I think there's better shorts. And talking about better shorts, look at Swiss franc. Remember, this thing did really well with that risk off movement in the markets. And then here we are, just, barely holding on to the moving average there. It's slowly moving lower. I think this is further downside risk, especially as the market stays strong. We don't have a whole lot of risk next week. So I think there's a better chance for Swiss franc to continue weak. So we'll probably continue looking for more yen shorts. Now, on the other hand, we take a look at the euro. I don't really love that. I mean, I like the fact that it had a nice bounce on the big green candle. You can see that this thing has kind of fallen back too. So if you just take a look at overall, this thing is just not going anywhere. And now, we take a look at that correlation between euro and Swiss franc. Seems like Swiss franc is underperforming a little bit more here. So maybe euro probably goes sideways here for a bit, and Swiss franc sort of takes the lead to the downside. So don't really love the euro price action here. But on the counterpart, we have the pound, which I really like the price action for. Remember, this thing was sitting pretty strong for most part of this year, and we had that massive sharp downside. And we talked about how is this a bear rally or is it just going to be a big recovery? And I mean, right now, this is a big recovery than sort of a bear rally. So I think next week, if it gets above those moving averages, this can easily climb back towards where it was. So momentum is there, velocity is there, and I think this thing has a more upside. So from a -2, now we are at 0. I won't be surprised we go to a +1 or +2 by next week. Talking about some other currencies like the CAD, I mean, this thing hasn't changed either. Take a look at this trend score. I mean, this thing is along the lines with the dollar, but this looks more like a bear rally to me. So until or unless it can really get above those moving averages, I like the CAD to the downside. Now, the only the catalyst that we have next week that could change things is that CPI. And if that CPI comes out hotter, again, I think that could help the CAD to maybe alleviate some of that downward pressure. But otherwise, if that comes out weaker, we have Bank of Canada that's already cut twice. So they're the leading the chart for cutting the rates. I think that's going to continue to put the pressure on the CAD to the downside. Now let's take a look at the best one here is the Aussie. And remember, we talked about how last week this was a big counter trend move, but this is a massive move, big recovery. So we went from a -2 now to a flat score of a 0. I think this has a better chance to go higher towards that 50 moving average. The momentum is there. This is finally moving along with that risk on sentiment. So we talked about that correlation. That correlation is working out here. So I like the Aussie to the upside. And then let's take a look at the Kiwi lastly. Yeah, take a look at that. Big candle on that rate cut. No follow through. And usually we talk about how when something should not happen, when it should happen, then again, something to continue to think about. So we don't want to go in with thinking that, oh yeah, Kiwi has more downside risk. Again, this is totally shrugging off or recovering a lot of that move, which is again telling me that maybe Kiwi wants to go higher as well. So again, these are the currencies that have not done well the last 2 months, and they're finally having their moment and the momentum is turning higher. I think these are the currencies likely to continue on with this relative strength here. Back to you, Rob.
Thank you, Ankit. And I just want to go over just where we were last week. If you remember last week, I said there's only 2 trades that you can make. I said the first trade, which the trade is that we should make, is that we look at the daily charts and say we're going to ignore them. We're going to ignore the trend scores because there is likely a big reversal bounce off the bottom. So I said you've got to go down to like a 4-hour chart or to a 1-hour chart in order to find the right trends on things like pound, Aussie, and Kiwi. And we wanted to be short against Swiss franc and yen. Or, I said that was the first trade you could do. Or you could wait for this bounce to bounce up with the belief that we're going to go back into a risk-off kind of market, and then you want to be short Aussie, Kiwi, CAD against the yen and the Swiss franc. So that's where we were last week. We said, look, you got to do either the short-term reversal trades that are really working, or you just got to wait for this bounce to fade and then go back to risk-off trades. So we had a full week. We had a full week of bouncing. And during that week, sure enough, we had things like Pound, Aussie, and Kiwi, which were the worst. They moved up. And we had things like Yen and Swiss franc that were the strongest. They moved down. That risk-on correlation is not over yet. And if you are going into this week saying, I'm now going to go back to being long yen and long Swiss franc, I think it's wrong. I think that's the wrong trade. I think there's still more upside to this risk-on trade. So the big question is, next week when we take a look at this board, which one of these three currencies is going to be the strongest? Because I think these are the three currencies that are showing the most strength. And then, of course, dollar and CAD look really solid. Remember, these didn't bounce up like yen and Swiss franc. But now when there's a risk-on move, they're really suffering. So I think it's a pretty easy call this week. You want to be long pound, Aussie, Kiwi against CAD and the dollar. Now, again, that is just the trend score. The velocity score is what's working right now. Where's the momentum right here, right now? And you can see there is momentum in these three currencies. All three of these currencies are showing momentum now. What do we pair it up against? Well, we like dollar, we like CAD. These are showing momentum to the downside right here, right now. A lot of weeks I will come on and say, okay, there's a lot in the middle here. We need to wait for these things to move to more extreme measures. Guess what? We are right there right now. So let's go in and pair up some of these crosses and look for potential entry points. All right, now I'm going to start off with our little trick at Maverick, where if you have three currencies that you like long and two currencies that you like short, well, the first thing we do is we start pairing up those currencies. So let's see which trade we like better, the pound or the Aussie. So if we take a look at a daily chart, on pound Aussie, we can see that over the last 6 or 7 days, it's been flat, meaning one has not been stronger than the other. So we can go down in other time frames, and we can see, okay, over the last week, we really haven't seen any difference. So there's really no difference here of whether you go long pound or Aussie. Now look, one will end up being stronger than the other, but right now, there's no way for us to tell. So pound and Aussie are the same, but let's look at pound and Kiwi. All right, now you can see that over the past couple days, pound has clearly been stronger than the Kiwi. That has mostly been because of the big move from the RBNZ. And you can see since then it's been about the same. So look, I'm going to have to go ahead and say when you take out the RBNZ move, it's basically the same. So I do not see any real relative strength between pound, Aussie, and Kiwi. Let's now go in and check on dollar versus CAD. So this is dollar versus CAD, and we can see here that there has been a downward trend here in dollar CAD, meaning the dollar is weaker than the CAD. So that means that my number one short is going to be dollar, number two is going to be CAD. Because there's not any relative strength telling me to pick one of those three currencies more than the other, I'm going to start off with looking at Aussie dollar. And this is just a beautiful, beautiful looking chart. This is a beautiful looking 4-hour chart. You can see we came down, we made this capitulation low, we bounced up, and we've just been doing the thing that currencies do. They run up to make new highs, they have pullbacks. They run up to make new highs, and then they do bases. They run up to new highs, do pullbacks. This is now a base here, a breakout. This thing is ready to go. So Aussie dollar, this thing is already breaking out from the 66.40. Where is the next stop on this? Well, if we draw a trend line maybe up to 67, that's still 60 pips. That's 0.85%. That's still plenty of meat on the bone for this trade. So Aussie dollar looks good. And then you're going to see, as we start to look at all these other currencies, it's going to look very similar to the rest. Here's pound dollar. Pound dollar is a little bit more overextended, so I would favor Aussie dollar because, look, we've already had a substantial run. We know that when things have a substantial run, they typically base, just like we had here. We pulled back and based before we started another run. So since this one's a little bit advanced here, I'm going to put pound dollar on the shelf. Kiwi dollar, it's this candle right here. If we take it out, we can see that we got a pullback and then a bounce here. I'm definitely liking Aussie dollar best of all. So that to me is the trade I'm going to start out with next week. Aussie dollar long. Ankit, I know that's a currency that you're probably looking at as well, but is there anything else you want to take a look at?
Hey, Rob. Well, yeah, we're kind of looking at the same thing. I think outside of the dollar, if I want to take a look at the next best option, I think it's all the Swiss franc process. So if you take a look at Aussie Swiss franc, kind of find a very similar pattern. They're just kind of moving in tandem. So here we are, nice little, a base setup here that, it looks like it wants to break out. So let's say if the dollar takes a break, I think the Swiss franc likely to kind of move along the same lines. So Aussie Swiss franc, I'd like to set up here on the 4-hour chart. That's a chart that I'm using for a lot of my setups. Kiwi Swiss franc looks very similar. And then we could go on the list with, and I'm sure pound looks extended there too. We can take a look at pound Swiss franc. And here we are, right at that resistance line here. So, if the dollar looks extended, I think the Swiss franc will probably be the next best option. So that's exactly what I'm looking at.
Thank you, Ankit. Great as always. Wrapping this up, I think the markets are going to remain strong. Ankit agrees the markets are likely to remain strong. I know that we just came from this panic, and it's very easy to get rattled and then to doubt the rallies. And trust me, I was a perma bear for years. In my beginning of my career, I was always the sky was falling. Everything was negative, and I listened to all the perma bears like, Kyle Bass and all these people that always were getting on TV and saying that it's going to fall. Like, don't trust any rallies. That hurt me as a trader. I know I still have perma bears, and I try to talk to my perma bears as a former reformed perma bear, that it's very easy to get into that negative, the sky's always falling. And when especially after we have these big catastrophic events, even like a COVID, perma bears had a very hard time jumping aboard the rally after COVID because, what a total disaster for humanity. And yet the markets rallied like crazy afterwards. You have to get into the mindset and just reading charts. And all the charts were telling us that, number one, we had a capitulation low. Number two, we talked about, hey, look at those 4-hour charts. They're cranking. Until those 4-hour charts tell you it's not cranking anymore, you've got to be on the long side. So perma bears, stay negative, be grumpy, but get on the long side. That's how you're going to make money in here. And as always, focus on relative strength and weakness. That will never lead you astray. Everyone have a great weekend, and let's go make some pips next week. Goodbye, everyone.